Great to see you again, Ike. First of all, I didn't realize valuations were quite that bad. So what are they these days?
Yeah, hey Kelly. So yeah, it's been a rough ride in retail. I feel like it feels like 10 years ago that we were reopening. There was a big recovery play. The group was up 100%. This is late 2020, early 21. Since last summer, the group has actually underperformed the market by 30 points, and they've seen their multiples cut in half. We're around 10 times earnings for the space.
Wow.
That's a 14-year low. We haven't seen that since 0809, which is pretty concerning. The problem, Kelly, right now is numbers have not come down. So while valuations look compelling, the issue is that people are starting to think that maybe if demand does start to wane, these companies might have all overguided.
Right. So it looks like they're trading at 10 times forward earnings, when in reality they're trading at 20. If I'm not saying earnings are going to fall by half, but what you're saying is like the worst thing people who are worried about the yield curve want to hear, because it kind of lends credence to this idea that the consumer, the one stalwart in the economy with hugely liquid balance sheets in better shape than they've been in for years, that could crumble. Would inflation be the reason?
Well, look, inflation is a problem for sure, but I think the biggest problem right now is the inability to forecast demand for certain discretionary categories. So to put it in perspective, so think about soft lines, just apparel and footwear. It's a category that grows 1% to 2% a year like clockwork. And the CAGR on that category since COVID hit is more like 8%. It grew 30% last year. So said differently, we've overshot potentially for soft lines by about 10%. And if you think about it in different categories within soft lines, sporting goods, jewelry, some of these categories have overshot their CAGR by 20 or 30%. So how do you underwrite growth? How do you get any kind of comfort, especially with the potential that the consumer is actually going to start to slow? That's the problem, and that's why earnings are pretty shaky right now in the eyes of investors.
Shepard Smith here. Thanks for watching CNBC on YouTube.